Join me as I dive into the wild world of Google stock predictions and try to figure out what's next for it. Google stock has always been a hot topic in the tech market, and for good reason. Its volatility and wild price swings keep investors on the edge of their seats. But what makes this tech giant so fascinating, you ask? Well, for starters, Google's massive market capitalization and global reach make it a bellwether for the entire tech industry. Regulatory pressures have been a major thorn in Google's side lately, with antitrust lawsuits and growing scrutiny over its data collection practices keeping investors up at night. And let's not forget the elephant in the room, competition. With new players entering the market and disrupting traditional industries, Google's dominance is no longer a given. Add to that the ongoing trade tensions and their impact on global economic growth, and you've got a perfect storm brewing for Google's stock performance. On top of that, the company's valuation multiples have been compressing, making it harder for the stock to justify its famously high price-to-earnings ratio. As if all that wasn't enough, the search giant is also facing some stiff competition in the AI game, with companies like Microsoft and Amazon breathing down its neck. Google's core business segments, search, ads, and cloud, have been the driving force behind its revenue growth, but recent reports suggest that growth is slowing. And then there's the increasing expenditure on new initiatives like hardware and Play Store, which are yet to yield significant returns. But amidst all the gloom, there are some bright spots. Google's cloud business has been picking up steam, and its investments in machine learning and AI could pay off big time in the long run. The company's recent earnings report did beat expectations, but only just, and investors are still waiting for some clear direction on its growth strategy. Meanwhile, analysts are mixed in their assessments, with some predicting a rebound and others forecasting a further decline. One thing is certain, though, Google's been busy reinventing itself in response to changing market dynamics. The company's shifting focus towards cloud infrastructure, artificial intelligence, and emerging markets is a clear acknowledgement that the days of relying solely on ad revenue are numbered. And let's not forget the recent rebranding of its parent company to Alphabet, which could signal a more aggressive push into new markets. What's more, Google's been gobbling up startups left and right, beefing up its capabilities in areas like AI and cybersecurity. So, what does it all mean for the stock? Well, for one, it suggests that Google's diversification efforts are finally gaining traction, and that could be a major catalyst for growth going forward. One crucial insight we can glean from recent analyses is that Google's ability to adapt and innovate will be key to its future success. The company's willingness to invest in emerging technologies and take risks will be crucial in staying ahead of the competition. And then there's the shift towards more transparency and accountability, with Alphabet's new governance structure promising to give investors more insight into its various subsidiaries. Perhaps the most telling sign, though, is the growing optimism among analysts, many of whom are predicting a recovery in the stock's fortunes, driven by its strong fundamentals and improving sentiment. So, what's next for Google stock? In short, the future looks uncertain, but there are reasons to be optimistic. Google's resilience in the face of adversity and its ongoing efforts to reinvent itself will be crucial in determining its stock's trajectory going forward. As investors, it's essential to keep a close eye on these developments and adjust our strategies accordingly. Thanks for watching, and I'd love to hear your thoughts on Google stock in the comments below. Don't forget to check out my other videos on stock market trends and analysis, and if you like this video, be sure to hit that subscribe button for more content.